Good evening, everybody. I think we can start with our webinar tonight, Buying a Home in Groningen. Welcome for joining us. And tonight, of course, it is the idea to take you through the whole process of buying a home in the Netherlands and in Groningen in specific. My name is Philippe. I'm the business unit manager of the team, coming from Belgium originally. Proud father of a daughter of 3 years old, and who thinks that she's already 10 years old, so that gives some pleasant circumstances once in a while. I bought a home in the Netherlands myself as well 3 years ago, I'm ready to support you and to guide you through the process tonight. Maybe first I'd like to start a little poll to see who you are and what you do exactly. So I will launch the poll on the screen, and I give you some seconds to answer them. So where did you find out about this webinar? What made you decide to buy? And then I'm happy to share the results with you. I see some people found us on Facebook, also on the website. And a lot of you, like 75%, likes to settle. And also one of the participants says that the rents are too high on today. I totally agree to that. Perfect. Okay, so most of you found us on Facebook, Instagram, also some on the website or the newsletter, and one person also found us by a friend or a colleague. And I just explained that you believe that rents are too high, and most of you like to settle as well. So that's a perfect reason to come with us tonight and to follow this webinar. I'm going to continue to the next slide, if it wants to work. Voila. This is the content. Of course, we have a little introduction. Then we are going to tell you something more about the market. Of course, very important to get some market information. We will also explain what are the market drivers to us on today, and not only to us, also to the experts, and what are the actual numbers on all those drivers, or what are the trends. What do you need in savings if you buy a property? 3 tips. Also welcome, of course, in this competitive market. And also in general, in the end, we go over the total timeline, that you have a clear view where you start, where you end, and what are the steps that you need to take. Also, the time you need to take into account to buy a place. First interesting topic to start with is that greatness is achieved in the agency of others. What does that mean? That we don't work alone. I'm presenting, of course, today, but you will also see my colleague Rafaela. Rafaela is responsible for our team and the buying and rental services in Groningen in specific. So she comes originally from Brazil, but she speaks Portuguese, English, and Spanish. So if you need her, then she can respond to all of your questions in all of those languages. And then you see as well that we have Katie, Giovanna, Ludo, Rick, and Ellen supporting us. Apart from that, we still have the financial people helping us. So a big team to support you in finding your way to a property. It can be or as a rental or in buying. Today and tonight we focus on buying, and what kind of partner we are for you. We like to say that we are not a traditional real estate agent. It doesn't mean that we don't have the knowledge. It doesn't mean that we are not professional, but we focus also on the service, and also on the fact that, of course, we know as well that you are an expat, and that maybe you don't know how things go in the Netherlands, and you need some extra information. We focus on that. Service for us is very, very important. As I said, we help with buying and renting. So if you need this, if you just need a home, then we can support you, or with finding a rental, or with buying a place. We charge a fixed fee. That is also important to mention. So we will not charge a percentage on the purchase price of the property, but we will always charge a fixed fee. And if you wait a little bit longer towards the end of the presentation, we will share also our fees depending on the package that you choose. I forgot to say that, but if you have a question, you can always pop it in the chat. And at the end, we will come back to your questions. Of course, as I said, we know what it is to settle in a new country. We lived abroad ourselves, or we moved to the Netherlands as well. And then we know as well that on specific topics during your journey, yeah, you need some extra information, or you have specific questions that maybe Dutch people don't have, but for sure you will yeah, bump into those specific questions, and therefore we are there for you to answer them, of course. Why is it important to have a buying manager, and why is it important to choose for EHN? It is important in the sense that also for selling agents, and that's specific in the Netherlands, but they will take an offer from a buying manager like EHN, they take it more seriously. Why? I can tell you that often, even today, I received an email from a selling agent that said, yeah, we sold a property that you had a viewing as well. Unfortunately, at that specific property, you were not the winner of the bid that you made. But in the meantime, yeah, the actual buyer could not finance the property, and so the property is back on the market. Do you like to consider to review it with your client again? And there is something that happens often, I have to say. The reason also why selling agents prefer parties that already have a buying agent, and that they do their homework before they make the offer, and then when the offer is made and it's accepted, that it's very likely for the selling agent and his client, the seller, of course, that the property is sold and they don't need to go back to the market. Yeah. We can also sometimes book viewings when it's no longer possible. Sometimes selling agents, or often selling agents, will also keep some of the hours or days free for yeah, buying agents. The moment that you try to book something and it's not possible, we can give a call, and it is likely that we can still book a viewing for you. Not always, but often. Of course, very important, when you look in detail to the property, you will receive a lot of documents. That is clear. The property documents, they are all written in Dutch. That is normal, as it is the national language, of course. Therefore, we will be there to guide you through all that information, all that documentation, and we will share with you also always a summary of that information, so you are able to maybe mention some red flags, or yeah, see as well which information is missing, and understand all information that is provided. We help define the market value with you. That is also important. We come to that a little bit later in the presentation, and it will be said more than once. But what is important at the market value, that it will be the 100%, as they say, that can be financed with a mortgage. It's always a maximum of 100% of the market value. So the moment that you are going to make your offer, and you calculate what offer you like to make, also take into account your savings, it is always necessary somewhere to define that market value to be able to make a good offer, but also an offer, of course, that you can finance afterwards. And then, of course, we will guide you and inform you about rules and regulations that apply, and make sure that not only our mistakes that we maybe made in the past, but also and maybe some mistakes that we saw with clients, or with, yeah, in general, the market that is going on. We close more than one deal a week, that is for sure. So in that sense, we see a lot what happens, but also sometimes the mistakes that happen in a certain file. Maybe the next question that I have for you is to ask, where in the process are you at the moment? So I will launch a poll on the screen again, and you have some seconds to reply to it. Always interesting to see how far you are already in the process of today. So where are you in the process? Did you chat with a mortgage broker? And did you chat with an agent? I see a lot of people are researching. That's very good, and also very interesting then to follow on today. Only one person chatted with an agent before, and also one person already had a chat with a mortgage broker. You have some seconds left. Okay, and then I'm going to end the poll. I will share it on the screen as well. Normally, you should be able to see it. So most of you are researching and some of them spoke already with an agent or a mortgage broker, but not many of you. That's no problem. I will come to some elements as well about mortgage, not totally in detail, but we will go a little bit into the most important aspects of that in a minute. And of course, if you didn't chat with an agent, that's no problem at all, because that's why you're following today. Perfect. Market information. That is very important, of course. This slide maybe says it all. What is important to see on this slide is, of course, that you see the development of the prices going forward in the Netherlands over the different years. And we start on this slide in 2005. And then you see most of the time prices always go up in the Netherlands. Even if I have another slide, if you compare it, of course, because you also need to take into account the inflation, but then still housing prices in general go faster than inflation. Of course, what we see as well, and that's important to mention as well, is that we had 2008, 2009. There we had a little bit of a problem going forward in 2010. And then we had the same problem again as a result of that 2013. You see as well a dip in the selling prices. So it is clear that prices go up, but that there can be some periods in time where we have a little dip in the sales prices. As you see, afterwards it recovered quite fast, I have to say, and it went up quite steep. So if that's always one of the main questions that people ask, do we need to buy now or do we need to buy later? Of course, if you can buy at the cheapest moment in time, that's always the best. But if you buy at the moment that it's a little bit higher, but you don't have to sell and you just keep the property, then you see as well that at a certain moment in time, you will always come at the same level and even go higher than the level that you bought the property. Yeah. So it's not only the question, do I need to buy right now or later? Of course, that's a good question, but it's also a question that you need to ask yourself, because I see a lot of people that wanted to settle. If you want to settle, then the moment that you don't need to sell, of course, you don't have a loss as well. So in that sense, there is no big risk in buying a property. Of course, what we see is last years, you see it, the quite steep increase of prices. For sure, 2020, 2021, prices went up very fast on average in 2021 with 15% all over in the Netherlands. Some places like in Groningen, it was even higher than 15%. What we see compared 2021, the last quarter to the first quarter of 22, it seems that the prices are stabilizing a little bit. Yeah. So that is important to take that into account. We always see an increase, but we see as well on today that the prices are stabilizing a little bit. Last comment I like to give to this slide is that we are talking here about existing properties. Yeah. If you talk about new builds, then we're still talking about something else. You see that as well. The average price of an existing property in Q1 is 426,000. For a new build, the average price is 466,000. You cannot compare those prices one-on-one. On existing properties, for example, you have transfer tax. On new builds, you have VAT, and there are some other differences. But if you want to have some more information on new builds, then send us an email or go to have a look on our site, because we give also some webinars on new builds, and then it's important to follow up on that as well. Yeah. In specific for Groningen, then, what do we see in the first quarter? We see that there is a lack of houses in the market. That's something we see already for some time now, and they call it that the market is drying out. The problem, of course, is that when people want to sell their house, they need to find something else. And if it seems not to be that easy for them to buy something else as well, then they keep their house just for themselves as well and don't sell it yet, and until the moment that they find something, and that can take a time. It has as a result that people that maybe are interested to sell don't do it right now. And as a result, you see that we went down 8% compared to last year, but even in Q1, we went down 22% compared to Q4. Yeah, so very important to know that on today, there are a lot of nice houses in the market, but there are less houses in the market than in general, the case for not only for Groningen, but even in the total of the Netherlands. If we see to the average purchase price, the 324,000 in Groningen, you could see as well that it's lower than the 426 for the total of the Netherlands. Then we see that we went up for the same period last year with 12%, and that we see that from the last quarter, as I said, we only went up with 1.2%. That's something we see very clearly, that it seems that we come at a certain level where prices are somewhere at the platform, to say, and the steep increase that we saw before is not happening anymore, at least not everywhere, because there are still places and neighborhoods where we see that prices still go up. But for sure, it's not everywhere the same in the Netherlands, and also not everywhere in Groningen. Yeah, we come at an average purchase price around 2,860 euros a square meter. You can also see the differences if you compare to last year, plus 20%. That's what I was saying. You see that on 1 year time, prices went up quite fast. If you see as well, compared to last quarter, it's 9.4%, still a high increase per square meter, but not the same as compared to last year. And then the sales time, it's still a very short period, 29 days. Also over there, if you go into the market, that's what we always say, but that's good. And that's also the reason why you follow this webinar, of course. If you go into the market, be prepared, because the moment they put the house for sale and the moment that the contract is signed, it's only 29 days. So that's a very short period of time. So you always need to be prepared when you enter the market. Yeah. And then we saw the numbers now of the market in the Netherlands. We saw the market information as well, and the numbers in specific for Groningen. But it's also interesting to know what are the market drivers, and what do we expect of those market drivers. I go forward a little bit on the elements that I said. You have some ups and you have some downs in the market. And based on market drivers, what do we believe is the market going to do on today? I have to say that on today, it's very difficult to forecast, but still I'm going to give you some elements that can help you define yourself as well, what you believe the market will do. For sure, the high prices are pumped up a little bit, to say, or are pushed by some fiscal benefits. We have the tax exemption that apply. You know that if you are below 35 and buy under 400,000 of a purchase price, then you can be exempted from taxes. If you use the taxes, or if you use the property yourself to live over there, then the taxes will only be 2%. And it's only when you use it as an investment, or you're not going to live there yourself, that you need to pay 8% as a transfer tax. So that's very interesting, of course. On top of that, you have an interest rebate. So the interest you pay on your mortgage, you can deduct from your salary before it gets taxed. That's also interesting. You have no capital gains. So when you buy a property, you make an added value. When you sell the property again, then that total capital, you can just use it for your next house, because you will not get taxed on that. And then in specific for the Netherlands, we have also tax-free parent donation, where Dutch people that give a gift to their children, and they invest it in real estate, that they are exempted from tax as well over there. This is ending also already for this year. It will not be the same amount anymore that applies, and the next coming years it will be totally cancelled. But still, all those fiscal benefits make that it is interesting to invest in a house, to buy it instead of rent it. And therefore, of course, a lot of people are interested, so the prices go up. Low interest rates, I put here on the screen. Of course, the next coming months, we're going to see if we are still speaking about low interest rates. I have to say, and so it's probably as well, that the couple of months now in 2022, the interest rates went up quite spectacular, you can say. So in general, if we see it in a historical perspective, the interest rates are still low. Yeah. The only thing that we can see on today is that interest rates also come up to the point where they reach 3%, or even with some banks, they are higher than 3%, also depending if you take 10-year, 20-year, or 30-year, as a mortgage, and it depends also which type of mortgage you take. Yeah, there's also interest only mortgages, where you only pay the interest and the total amount you will only pay totally at the end of your mortgage term. And of course, there are all different interest rates that apply to that. But we still see that interest rates are going up. And also, if you look at what banks are telling on today, then they expect even the interest rates to go up a little bit more before the end of the year. So low interest rates in a historical perspective, but interest rates are going up. And as they keep coming or they start coming above that roof of 3% as well, that I just explained, it will have, or it has maybe already an influence on the purchase prices, as we see that they don't go up that fast anymore as last year. Somebody mentioned high rents. That's totally correct. You can make the comparison between renting a place, a nice place, and then buying a property. Of course, with buying a property, you will always build up equity. With having a rent, you don't do that. And then you see that the installment in the past sometimes from mortgage was even less expensive. Maybe now, sometimes if you make the comparison, the monthly installment will be almost the same. But of course, with rental property, you don't build up any equity, and with buying a property, you do. So for sure, the high rents and then the alternative for buying are also a reason that we see that prices go up. And then, of course, one of the main reasons, and that is always a little bit in balance with demand and the offer, of course, that we see in the market. There is a lack of supply, so that is the offer in the market, and there is still a big demand that we see. And that demand is from people that are just Dutch people living in the Netherlands. It also has to do with expats and the increase of the population. It also has to do with families that become smaller by people divorcing and so on and so on. In the end, what we can say is that if you look at the data that you can see, on today, there is a lack of 300,000 properties already just for today. Yeah. If we go forward, then we see that the next coming 10 years, we need 100,000 houses every year for the demand there will be in the market. That is a little bit the forecast. So it means that we need to build 1 million houses the next coming 10 years. So the best would be that we have new builds in the market at the number of 100,000 every year. But we see, and that's the next one, I believe. No, it was not in there. I'm sorry. We see that the materials are getting a lot more expensive on today. And as a result, it is also more difficult on today to sell the properties at the right price, to sell the new builds at the right price. And there are some property developers that at the moment put their projects on hold. Yeah. So that is really a problem. That is a big problem in the sense that it will not stabilize the market immediately. So at the one hand side, I can say the interest rates going up, it means a push on the prices, that is for sure. On the other side, I can say that the fiscal benefits, the high rent and the lack of supply still balance it out a little bit. Of course, if you go to interest rates of 5% or more, then it will be something different. But if we stay around that 3%, 3.5%, then it is very likely that prices will stay around the price level that we are today, or even increasing a little bit. But as I just said, not expected at all to have the same numbers as we had last year, of course, due to that, the financing getting more expensive. So that are the reasons why prices increase. We still believe on today that for sure prices are stabilizing, but we don't see a reason at the moment for prices to go down. And then some specific measures as well that were taken already or still going on. We see the self-occupancy obligation. This is very important if you look at the property and you want to rent out the property, because if you have a WOZ value up to 355,000 euros, then you will need to live in the property yourself for sure for some number of years. So always check on that If you want to rent out a property, then you need to double check on those specific conditions that apply. We see here, the second one, I already explained a little bit, but prices are still going up for sure if you compare to last year. But in general, if you compare it to last quarter, the rate is a little bit slower. So therefore, look at the numbers, try to follow our webinars, or ask us a question, of course, because we will always do, as I just explained, the price research for every property. But it is a moment in time as well where prices are still going up, but it's also the moment to always look in detail what that neighborhood or that city is doing at the moment itself, because you need to make a good offer, of course, to win the bid, but you don't need to do a foolish offer as well with just overbidding too much and using the percentages that applied last year. And then, of course, the last element I just mentioned, the interest rates that are going up. We can still say that they are low on today compared to the historical level, but of course, they are increasing and they have some impact on the market, as I just explained. Of course, as well, when something would go different again with Ukraine and everything that is a result of that, can change the situation again, but it doesn't seem that, unfortunately, the war in Ukraine will stop tomorrow. And so it will have some impact going forward this year that is expected. And then we come to the next question. If you looked in detail at the market and you want to go forward, as I just explained, starting the webinar, it's always important as well to know your financial situation and to know exactly what you can afford and what offer you can offer to the potential seller, of course. Therefore, you need some savings. That is clear. You can have a 100% mortgage on the value of the property, but you will need some savings as well. The first thing that you need to pay when you buy a house is the transfer tax. And the transfer tax, as I just explained, normally is 2% of the purchase price, only when you're younger than 35 and buying up to 400K, and you have these benefits for the first time in your life, then you can be exempted. If you're not going to live in the property yourself, I explained as well, then you need to pay 8% and not 2%. So very important to take that into account. For the rest, of course, you will have the cost of the notary. You will draft a mortgage deed and a transfer deed. There are different prices with notaries, depending also on the quality of services, the reaction time they have, and so on and so on. But take into account between 600 and 1,100 euros, depending on the notary in specific you're going to visit. You have then the mortgage broker, who can be an independent mortgage broker, or it can be somebody with the bank. What is the difference over there? That's very clear. In the sense, the bank is like a shop. It's a shop that sells its own brand and its own products. A mortgage broker is more like a shopping center, to say, and they will have all the different products over there, and not only one specific product from themselves, but they can offer you all specific products that there are in the market at that moment. This will have a little bit of a difference as well in the price. A bank will charge you an administration fee around 1,500 euros. A mortgage broker will start with 2,500 euros, and depending on the service that you ask with them, go until 3,400 euros. But again, over there, it's important for you to know as well, if you want to go to one bank with one product, or you want to have a mortgage broker that overlooks the total market. And sometimes also, I have to say, in expat files, those mortgage brokers that are really specialized in helping expats, they know in the more difficult cases as well how to handle. So for that, it can be interesting as well. Then you have the real estate agent. As I said before, a normal typical real estate agent will charge 1 to 2% of the purchase price. We will charge a fixed fee. Our fee is not mentioned in here, but it comes a little bit later. You will see that in a minute. You will have the appraiser that is necessary to receive your mortgage. You always need to have an official appraisal report. which the bank will then use to grant you that 100% of the value of the property. And it depends then also if you take into account renovation or not. That will also play a role in the price of the appraiser. But yeah, let's count it between 650 and 800 euros. That will be the normal price. We have the technical inspection. You can decide to leave that in your offer, yes or no. That's something up to you. If you choose for a technical inspector to come by, they will cost around 435 euros. And then we have an interpreter who will interpret your documents with the notary. The bank guarantee to provide for the 10% down payment that you need to make. If you don't do it as a deposit itself, then you will need to use a bank guarantee. And then you can also use NHG. NHG is somewhere like an insurance where you are insured when you cannot repay your mortgage, but it will also allow you to have some better interest rates that apply. The only thing is when you apply for that NHG specific ruling, then you also need to pay upfront a cost of 0.6% of the mortgage amount. So not of the purchase amount, but of the mortgage amount. But it's always important to double check with your mortgage advisor if you can apply for that specific rule of NHG, yes or no. And then also ask them to make the calculation if you pay that 0.6%, that you still have better conditions in the end. And most of the time it is the case. Voila, so you know what you have as savings, and then yeah, we go forward and we try to win in the current market. So we like to make an offer. What are we going to do first is we look at the value. So we stated it over here. Real estate is location, 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 but also the value is very important. And I'm going to explain with an example. So we see this property that has an asking price of 395,000 euros. It's important to know in the Netherlands that that asking price can be put at any level. So it's the seller who decides if I put it high or I put it low. That's up to him to decide together with the selling agent, of course. Here they put it at 395,000 euros. So that's the price we see over here. We see a market value of 415,000 euros. And we see finally that we are able to purchase the property for 435,000 euros. Yeah. And if you see then what that means, it means that we paid over 10% as a purchase price over the asking price. You can say, okay, so we always need to overbid with 10%. That is not that likely, as we see if we compare to the market value, we only overpaid with 4.8%. Yeah. And it is important, of course, that market value is the value of the property. So what you needed to add extra, maybe on top of the mortgage with your own savings, that is 4.8% or the 20K that we see over here. Yeah. So there is a difference between the asking price, the market value, and the purchase price. That is very clear. And I will show you a second example as well, where the seller here decides only to put the asking price at 375,000 euros. The market value is the same property is still 415,000 euros, and we buy the property at 435,000 euros. Huh? If you ask over here, what is the overbidding that we need to do on the asking price? It's 16%. Yeah, so no 10% anymore, but 16%. But of course, if we look at the value, then yeah, we overbid only with 4.8%. I hope this makes it a little bit clear to you that it is not at the asking price you need to make the comparison with the purchase price, but it is with the value that you need to make the comparison, because this is the value of the property, is the financing you get with a mortgage, and the 4.8% is then finally what you pay with your own savings. Yeah. So value, that's the first and most important rule to take into account. Of course, we will help you going forward, as I said again, with defining that market value in order for you to make the right calculations. And then what is important after that is, of course, we know what we have in savings, we know what is the value of the property. Then we need to go forward with submitting a winning offer. What is a winning offer? That's for sure, it's a good price. Yeah. But it is not always the highest price that you need to pay. What is important in that is that, as I stated before, it is important that you offer some security to the seller. Yeah? in the sense that if they agree to your offer and they say you are the winning, you made the winning bid, we like to sell to you, that they are sure that afterwards you will sign a purchase contract as well, that you get your mortgage and that you're able to finally sign the transfer deed. So what is important is that, for example, you will never make an offer exactly, or never, it is very uncommon to make an offer that is conditional to getting a mortgage exactly at the price of the price that you offer in your bid. There will always be a little bit of a difference in between. And of course, if you are that sure about your mortgage already because you spoke to your mortgage advisor, and you can take the financing clause out, so you don't put your offer conditional to getting approval on a mortgage, that even offers more security to the seller. It depends a little bit on different markets, and also the timing when you make your offer, if there are a lot of competition, yes or no. But for sure, if you can prove that you use also some own savings, and maybe also send a letter from your mortgage advisor that it is likely that your mortgage will be approved because they looked in detail to your file already. That offers a lot of security. And then it can be, and we had it before, that we didn't make the highest offer, but we made a very strong and secure offer, and that the seller decided to go forward then with our client because of that reason. Of course, offer the last or the least amount of hassle. That's also important for the seller. They just want to sell their house, move to the next one, and don't have too much things around. Two things important over there. Sometimes they will ask you to leave some cupboards or to leave some furniture because they don't want to move it. Then I would suggest to you, if it's not too much, then agree to that, and then you keep it or you throw it away yourself. The second thing that is important is, of course, the moment that they will sign the transfer deed, and then the transfer will happen so that they hand over the keys to you. As I just explained, the seller also needs to move, and in today's market, it's not easy to find a place for 2 or 3 months where they need to stay, where they need to move everything, and then to move from that intermediate solution to their new and final home in the end. So it is always important, you can ask that at the selling agents when you do the visit, to ask when will be the transfer. And most of the time, in today's market, as it is a seller's market, often you need to agree to that moment of transfer, which is proposed by the seller. And then the last thing is also important, is offer a personal touch. We see that sellers also like to see who is the person that is, who are the persons or the family that are buying our home, that are buying our place. And if they feel a little bit that there is a similarity with the persons that they are, it can help your offer as well. Of course, if we only offer 50% of the highest bid, that will not help. But if the offers are close, then for sure it can make a difference. So offer a good price, make the price as secure as possible for the seller, the least amount of hassle, and add a personal touch. And if you do that, I can promise you then you are very likely, maybe not with the first offer, but one of the offers that you make to make the winning bid. That was number 2. And I said we are going to give you 3 tips. So the last tip is the due diligence. And that's also important, of course, because you want to buy a house that you like, but you also like to buy quality, of course. We have 2 specific experts that come on site during the due diligence. We have the technical inspector and we have the appraiser. And my question to you is, do you book them before or after your offer is accepted? I give you 5 seconds to think about it. And I will give you the answer as well. So the answer is that you book them after the offer is accepted. And why do you do that? Because of course, both the technical inspector and also the appraiser, they will charge a fee to you, that is clear. As I just said, in today's market, it is not common that you make one offer, that you win the bid, and then you buy the property. It is more common that you make 3 offers or 5 offers, or maybe even 10 offers, depending on your situation, your potential of financing, and so on and so on. So that means that if you need to pay them like 5 or 10 times, it will cost you a lot of money. It's better to keep that and to put that in the purchase price, of course. So after the offer is accepted, we will book immediately for you the technical expert and the appraiser. And then we will make sure that you will receive the reports as well before the purchase contract, or at least within the 3 days following the purchase contract. And that is called the cooling off period. And at that moment in time, you can still cancel the contract if you're not happy and you don't want to go forward. Yeah. So they come in after the offer is accepted, and we will have the reports within the 3 days of the cooling off period after signing of the purchase contract. And then, as I said before, I believe it's the moment to run through the total process together of buying a house, and starting, of course, totally at the beginning. Maybe there is one bullet over here that is missing, and that is what I explained before. Please first be aware what is your budget. If you know your budget and you know exactly what is your mortgage capacity, then that is fine. If you don't know, then have a call with your bank or visit a mortgage advisor. If you want us to share some contact details for mortgage advisors, you can always leave your email in the chat as well, and we can share those contact details with you. But very important, know what you can pay upfront, and then we go to start with the search. The search, of course, as you see and as you saw on the numbers that I gave to you, that we see that there are a lot less listings in the market than there were in previous years or previous quarters. That makes it a little bit difficult, of course. It can be that it takes a little bit longer for you to find the exact property that you like. What we see now, that prices are stabilizing a little bit more. Then we see as well for some regions that we get more offers that are not listed, that selling agents come to us because they know us, of course, and they ask if we have clients for the properties that they like to list, but maybe at first offer to our clients. Yeah, all those channels are interesting to follow. So you go to funda.nl, you go to other websites like jaap.nl or Pararius or similar websites. You can also follow the social media of the selling agents, and you can always, if we work with you or together with you, ask us as well if we received a new listing from one of the selling agents in our network. And then when you start the search, of course, you book a viewing. You go to the viewing alone or together with us. And then after you came back from the viewing, we will do the total due diligence of your project. So we will do the property document review and the price research. And based on all that information that you have and the discussions that we have together, we will draft the offer for you and we will submit it and send it over to the selling agent. Of course, then we hope that we make a good or the best offer and that it's approved. And then when the offer is approved, as I just said, then we have the appraiser and technical inspector coming on site to do what they need to do, make a technical report and also make an appraisal report, what you need for the bank. After that, we sign the purchase contract. Of course, we always do the review together with you to check that everything is legally okay, but also to check that it's in line with the offer that you made. And then based on that signed purchase contract and the appraisal report that you have, you can submit it to your mortgage provider because that's then the start of your mortgage application. As I said, you have a cool-off period of 3 days after signing the purchase contract. Within that period, you can still pull out of the contract without paying any penalty. After that, it's not possible anymore, unless, of course, you have the financial clause. You cannot get a mortgage, and based on that, there is still a reason to cancel the contract free of penalty. If you don't have that specific clause in there, because you choose not to put a financial condition in there, then you will need to pay a fine of 10%. So very important to follow that process correctly. Of course, if you work with us, it's one of our tasks as well to point out to you when there is a specific deadline and which specific conditions you need to meet at those specific moments in time. And then you have an average of 4 weeks before the mortgage is approved. I have to say that also depends on the party you work with. Within a bank, you have normally 2 to 4 weeks that they need to approve your mortgage. We see that with external mortgage advisors because they use another communication. to the bank that they get an approval faster than that, and we count for them. The fastest was last year was 1 day, but normally they need like 3 days until 2 weeks to get your mortgage approved. And then after the mortgage is approved, yeah, we can go forward with finalizing the process. You will receive a statement of completion from the notary. That is the summary to say of the total cost you need to pay. So you will need to pay the purchase price, of course, all the costs that apply, like the transfer tax and the other costs that we saw a little bit earlier in the presentation. And then deducted from that, maybe the deposit that you already paid, of course, the mortgage that you're going to use, and then the balance in the end will be paid by your own savings. You will receive that statement of completion before you go to the notary, of course, before you sign any transfer deed. Before we go to sign the transfer deed, you see as well the word inspection. There is not a technical inspection, but we call it the final inspection. And that is where we are going to visit the property together with the seller and maybe the selling agent, also ourselves. We're going to do a last tour of the house to see that everything is empty, but also that yeah, everything is still there. They didn't break out a wall or something in the kitchen that was standing there before. And we also check on all appliances, on all installations, that everything is working, that the heating is doing well, and so on and so on. Yeah. After that inspection, we know that everything is fine. Then we go to the notary. We sign the transfer deed over there, and then of course you will receive the keys and you can use the property. We put it totally at the end of the liability term. If there would be something wrong, you still have a term of 2 months to claim something with the seller. Let's hope it will never happen, of course, but if they knew about something that they didn't explain to you before and you were not able to see it yourself, the technical inspector was not able to see it as well, and they pop up afterwards, then you can still put the seller liable for those defects of the house. But then you need to do it within a period of 2 months as well, because that's the timing where the court says it is likely that it's still the responsibility of the seller to come with a proper solution for that. Yeah. So that's the total timeline that you need to take into account. Of course, people ask always, how long does it take? It depends a little bit on how fast you find the property as well and how good your offers are, for sure. But you need to take into account period between 3 and 8 months, depending on how fast you find the property and how many savings or what mortgage you can have with the bank as well, of course. That's it for the timeline. And then, as I said, we will still come back to our packages that we offer. We have a smart package where we act more like a coach for you. So we will not visit the properties, but we will have communication with you as we have on today via Google Meet, via email, via WhatsApp, via the phone. That's all possible. That's called the smart package, and that we offer at 2,499, including VAT. We also have a complete package. There we are not a coach, but we are like a normal real estate broker, to say, that comes and visits the places together with you. Also, when the experts come to the property at a certain moment, we will visit the property together with you. And when you go to sign the purchase contract together with the selling agent or the transfer deed in the end with the notary, we will also attend all those meetings together with you. And then the last package, as I explained, we also offer a specific service on new builds. That is a little bit different, so I'm not going to explain totally in detail. But if you like to follow up on that, then as I said before, then I advise you to follow the webinar for new builds. Yeah? So for existing smart package, 2,499, and complete package, 3,999, including VAT, that is. And that's it, what I like to share with you for tonight. I think that maybe we still have some questions in the chat, or you can put them in right now as well. And then I believe Rafaela will read them and I try to give you a clear answer.
Thank you, Philippe, for the presentation. I can see that we have some questions here. The first one is from Jesse, and he's asking, what establishes the market value aside from comparable sales?
Yeah, of course, comparable sales are the most important. What will also be important, of course, is the state of the property itself. When an appraiser needs to make an appraisal report, they cannot make it only based on comparables. They also need to go to visit the property to see if it's really the state that is expected, and if it's comparable with the other references that they use. So that for sure is very important. And that's, of course, always looking back. If we look forward, of course, if you know that there will be a big development in the neighborhood of the house or the property that you're looking at, then it can have also an impact on the market value going forward. And it can be a positive impact or a negative, of course. But that are the most important drivers to take into account next to the comparables that you use.
Perfect. Thank you, Philippe. We have another question here from Gaurav Kumar. I am an expat. Let's say I buy a property and 3 years later, I move back to my home country. Can I rent my property and earn the rental income?
You are always able to rent out your property with two exceptions. One, you need to check with your mortgage advisor if that is possible based on the financing that you have. Because in the Netherlands in specific, you have two types of mortgages. You have a mortgage where you say, okay, I buy the property to live in the property myself, or I buy the property to rent it out. And those two types of mortgages have other conditions and other interest rates. So if you like to rent it out, then you need to agree with your bank on that. As I stated before, we have also the non-occupation stop at the moment, where if you have a WSS value, here in specific for Groningen, it was the 355,000 by heart. There, the city will say that you need to live in the property for a number of years. And for sure, also, if you like to use it as an investment, then you need to double check with every city, because the rules are not everywhere exactly the same, but it goes until a maximum of 5 years. But in a lot of cities, they say 4 years that you need to live in the property yourself, unless it's your family that lives in the property or some other specific exceptions that apply. But otherwise, it's not possible to do it just like that, because then you will need to pay a fine.
Great. I think there is no more questions for today. I just want to let everyone know that if you still have some questions or would like to book a personal intake, you can book it in a meeting with us via the link that we are sending afterwards. We'll be very happy to help you out. Thank you.
Perfect. Okay, then I thank you all for following this webinar. As Rafaela said, if you like to have some personal information or discuss some personal topics, then feel free to schedule an intake. And as we mentioned before, we will share this webinar with you as well in one of the emails that is following the next day of the next weeks. And if based on that you have some questions, feel free to reach out to us. So for now, I wish you a good evening, and hopefully we will speak to each other later. Goodbye.